Imagine waking up one morning, grabbing your phone to pay a bill, and suddenly seeing a message you never expected. Account restricted. You try your debit card at the grocery store, and it gets declined. You attempt to transfer money to cover rent, and the bank app won't let you. No warning, no explanation, just a frozen account and no access to your own money. That exact situation is about to become much more common because a brand new federal banking rule has officially started rolling out this week, and it affects every single person with a bank account. This isn't a minor policy tweak buried in fine print. This is a major shift in how banks verify your identity, monitor your transactions, and decide when to lock down accounts they consider suspicious. The scary part is that you don't have to do anything wrong for this to happen. Normal everyday banking activities could now trigger automatic restrictions. Selling something online, receiving a larger deposit, traveling to another state, even using payment apps like Venmo or Zelle could suddenly flag your account. And banks are being told to act first and ask questions later. That means freezes can happen instantly, often before a real person ever looks at your situation. Most people will have no idea this change happened until they're standing at an ATM wondering why their money is locked. But today, you're getting the information ahead of time. I'm going to break down exactly what changed, why it matters to you, which everyday actions are most likely to cause problems, and what you can do right now to protect yourself. So, here's what actually changed this week. Federal banking regulators, working alongside the Treasury Department and several financial oversight agencies, have officially put a new nationwide rule into effect. This rule has been in development for more than a year, and now it is being rolled out to every major bank across the country. Institutions like Chase, Bank of America, Wells Fargo, Citi, and dozens of regional and online banks are already implementing it right now. By the end of this month, nearly every financial institution in the United States will be required to operate under these new standards. The rule focuses on three major areas that directly affect how you use your account. First is enhanced identity verification. Banks must now collect more information about who you are and confirm that information more aggressively before allowing certain transactions. Second is expanded transaction monitoring. Automated systems will scan your activity in much greater detail, looking for anything they consider unusual or outside your normal pattern. And third is faster account restrictions. Banks are now encouraged, and in some cases required, to freeze or limit accounts immediately when their systems detect something suspicious, even if there is no proof of wrongdoing. On paper, this all sounds reasonable. The official goal is to prevent fraud, stop scams, and catch criminal activity before it spreads. But the reality of how these systems work is very different from how they sound in government announcements. The new monitoring tools don't look at you as a person with a history and a life. They only look at numbers and patterns. If something doesn't match what their algorithm expects, the system reacts automatically. And that reaction can directly impact your ability to pay bills, withdraw cash, or simply use your own money. What makes this change so important is the speed. Under the old system, unusual activity might trigger a review. Now, unusual activity can trigger an instant freeze, and by the time a real human looks at your account, the damage and frustration may already be done. Now let's talk about why this matters for regular people. Most of us assume that as long as we aren't doing anything illegal, our accounts are safe. But under this new rule, that's no longer true. The biggest problem is that automated systems don't understand context. They don't know you sold your car, you're traveling for an emergency, or you got a bonus. All they see is unusual behavior, and different is now treated as dangerous. This is where people get blindsided. A routine transaction gets blocked and their account locks without warning. Fixing it takes days of phone calls and document uploads. During that time, bills don't stop and responsibilities don't disappear. Let me show you exactly how this plays out. Imagine you sell something online and receive $2,500. If that's larger than usual, the system may flag it instantly. Your entire account becomes restricted. No withdrawals, no payments, nothing until someone reviews it manually. This could take days while your rent bounces and utilities get declined, or you travel and try using your card. It gets blocked. You're far from home with no access to your money, stuck on hold with customer service. Another example, you receive a bonus or overtime payment. Instead of celebrating, the deposit gets placed on hold while the bank verifies it. Small business owners who deposit cash regularly will feel this even more. Even a parent sending money for medical bills can trigger alerts. There's another part nobody's talking about. When your account gets flagged, that flag doesn't disappear after it's resolved. Banks share information through risk databases. A single false alarm can follow you to another bank, affecting future account applications. Multiple flags make you look suspicious on paper, even if every transaction was legitimate. Once labeled high risk, banks can close your account or refuse your business. Let's get into the specific changes rolling out now. First is stricter identity verification. Your phone number, email, and address must be accurate or your account can be restricted. Second, transaction limits are being quietly lowered. A $5,000 limit might drop to $2,500. Cash deposits face more scrutiny with detailed questions about origins. Peer-to-peer payments through Venmo and Zelle are monitored aggressively. Banks aren't required to warn you before restrictions hit. You'll discover the problem when your card declines or you can't transfer money. Fixing it means long hold times with limited power representatives. Reviews can take days while your money sits locked. Understanding this reality explains why preparation matters. Now, let's get into the most important part, the practical action plan you can follow right now. First, log into your bank account today and make sure your phone number, email address, and mailing address are completely up to date. When a bank flags an account, they contact you using the information on file. Second, review your transaction history. If you're planning a large deposit or big transfer, consider calling your bank ahead of time. A proactive call can prevent a freeze. Third, set up account alerts. These notify you instantly if something goes wrong. Fourth, keep documentation for important transactions. Save receipts, emails, or messages explaining large payments. Fifth, save your bank's fraud department contact details now. Sixth, if you run a side business, separate your personal and business banking to reduce flagging risk. Seventh, keep notes about peer-to-peer payment transactions. Eighth, learn to use online banking tools for document uploads. Finally, stay alert for scams. Your bank will never demand your password or PIN. Even if you do everything right, your account could still get flagged. If that happens, stay calm. Be polite but clear with your bank. Ask specific questions and document everything. Provide requested information quickly. Escalate to a supervisor if needed. You can file complaints with the Consumer Financial Protection Bureau if the bank is treating you unfairly. Also consider whether your current bank is right for you. Some banks handle these changes reasonably, while others are overly aggressive. If problems become frequent, you can move your money elsewhere. So, let's bring everything together. A major new federal banking rule has officially started this week, and it changes how banks monitor accounts, verify identities, and restrict transactions. The best way to protect yourself is to be proactive. Keep your information updated. Watch your transaction patterns, set up alerts, document unusual payments, and know how to reach your bank quickly. If a problem does happen, stay calm, act fast, and don't hesitate to escalate. Remember that these systems make mistakes. A freeze does not mean you did anything wrong. With the right preparation and knowledge, you can navigate these changes smoothly. If this information helped you, consider subscribing so you don't miss future updates. I'd also love to hear from you in the comments. Have you ever had an account frozen? What happened, and how did you handle it? Your experiences can help others know what to expect. Thanks for watching.